Ladies and gentlemen, good day and welcome to Creative New Tech Limited Q1FY22 earnings conference call. As this conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ketan Patel, Chairman and Managing Director of Creative New Tech. Thank you and over to you, sir.
Good afternoon, everyone. Welcome to Creative New Tech Limited's earnings conference call for the first quarter ended 30th June 2021. Our company, as you all would know, was formerly known as Creative Peripherals and Distribution Limited. I would like to begin by expressing my gratitude to all of you for taking the time to join us. On the call with me today is Mr. Abhijit Kanvinde, CFO, Mr. Vijay Advani, whole-time Director of our company, and Bridge IR, our investor relations team. Before we get into the business and financial performance of last quarter, I would like to share some brief insights and recent developments regarding the company. Starting with some key recent developments. As you are all aware, most of the last year faced headwinds from COVID-19 virus outbreak. The pandemic, which brought the whole supply chain and entire economies to a staggering halt, impacted every aspect of our lives, from personal lives to business and industries across the world. Like every other business, we also face the impact of the lockdown. Even as industries reopened gradually, this year also started on a similar note, with the second wave of pandemic hitting our nation, leading to lockdowns in several states to curb the virus spread. Much like most other industries, our operations were also hampered in terms of logistics and demand. We have been working with lower employee capacity, encouraging our employees to work from home and stay safe. As the impact of the second wave wanes, we hope for faster upswing in activity going forward. Also, once traveling and tourism resumes more actively, we believe that the demand for photography, videography and related products is also expected to recover. Having said that, we believe that it is during these challenging times opportunities to further refine our internal practices and improve our operational efficiencies and skill sets can happen. And we have been actively doing that. I am happy to share that we recently changed the name of our company Creative New Tech Limited. Our business and vision far exceeds beyond just distribution. Today we are well established as brand licensees with a long-term agreement with Honeywell and are building further on this line of business. With C-Card, we have entered the online B2B marketplace vertical and we see this as a key turning point for our business. These changes, along with a vision to be a seamless platform for all partners, indeed created a need for this new name, which better represents our company and vision to be at the forefront of bringing new technology to the masses. On the distribution front, we continue to expand and refresh our portfolio with new niche brands and products, which are relevant to the times. Some of our most recent brand alliances include those with HyperEye, a US-based company specializing in technology-based muscle recovery and massage products well known in the wellness and fitness category. MSI, a well-renowned company name in computers, and Colorful Technology, a specialist in SSDs to name a few. Also, we recently tied up with Reliance Retail to distribute a broad range of Marvel and Disney branded products. These include audio products such as wired and wireless earphones, headphones and speakers, personal grooming products such as hair colors and straighteners, as well as small home appliances like toasters and sandwich makers. This tie-up gives us access to a huge market across multiple product verticals, expands our geographical coverage, and would translate to higher revenues, taking our business to newer heights. We recently strengthened this tie-up by adding a range of lights, bulbs, fan and home appliances from BPL. Having such a household name in our brand portfolio also broadens our market reach. In terms of brand licensing, our deepening association with a Fortune 100 company like Honeywell would serve as a guiding example for other brands wishing to leverage the licensed manufacturing model. We are in a process of launching a wide range of audio entertainment products and a new variant of air purifiers by Honeywell in the mid-September 2021. To support the anticipated growth from various lines of business in July 2021, we raised Rs 11 crores of funds through a preferential allotment of equity shares and warrants. The proceeds from this would be used to support our growth plans in Honeywell and to scale up our overseas operations. In June 2021, we suffered an unfortunate fire incident at our Bangalore warehouse. While some of the inventory was damaged, all of it is insured. But what is most heartening to know that there is no human injury or loss of life in the incident. We follow all the necessary procedures to be undertaken and a surveyor has been appointed who is investigating the incident. Coming to a brief introduction to our company. Creative New Tech is a dynamic company which has come a long way and crossed several milestones over the recent past. Today we are not just a market entry specialist for niche experiential brands across India and international markets, but also licensee contract manufacturer for a Fortune 100 giant, Honeywell. We specialize in market entry for global brands and work closely with partners to achieve optimal market penetration and growth. Our network includes all three channels, online, retail and general trade, thereby giving us a strong leverage to reach out to a wide market base. Furthermore, our value-added business model covers end-to-end vision from market research and competition analysis to formulating and executing region-specific marketing and pre-sales strategies for brands. We have a three-pillar strategy to grow and expand our business sustainably. The first key aspect of our business is brand licensing and contract manufacturing. With Honeywell, we have a long-standing agreement for contract manufacturing and distribution in 30 countries across APAC and Middle East region. We have a broad and continually expanding product portfolio with Honeywell, with air purifiers being the latest addition. Our products cover connectivity as well as audio entertainment solutions. We aim this licensing line of business by adding more international brands. Contract manufacturing is an effective model of business for various global brands wherein they can leverage local players' market reach to increase and grow their products' market share. We plan to utilize our experience gained with Honeywell for other international brands wishing to follow similar models. The second pillar is our expertise and stronghold in market entry and penetration for niche brands. Currently, we have a long-term association with 20 globally renowned brands which are leaders in their field. These are categorized in three broad divisions: IT, imaging, lifestyle and security products. Our value-added services like executing a brand market strategy and post-sale service along with this wide spectrum of products has helped our company achieve economies of scale and become a single sourcing point to our customers. Today, Creative Peripherals is such a sought-after name among OEMs as well as sub-distributors and retailers alike, being a crucial link in the supply chain. We continuously enhance this bouquet of brands with new and high-margin brands. Some recent brand additions to our portfolio including Edelchrome and Trias. The third key aspect of our growth strategy is KeyCard, our very own online digital B2B e-commerce platform. KeyCard is a game changer in our industry and will play a crucial role in expanding our business with new and existing customers at minimal additional cost. Overall, our focus is on these three main growth triggers: offer experiential products and enabling niche global brands to enter and establish in new markets, expand our licensing business and become an online platform for all customers through KeyCard. We continue to strive for higher operational efficiencies and adding high margin value products to our portfolio. Association with Honeywell, MSI, Edelchrome, etc. are steps in this direction. Coming to CCART, our new business initiative, I am glad to share that our platform has been making significant strides once launched last August. As I briefly mentioned earlier, CCART is our online digital B2B e-commerce platform built in-house by a dedicated team. It hosts all our customers in the supply chain and enables them to transact, discover, and share products and brands to their buyers in their own company's name. This platform also assists them to showcase their inventory and trade among each other, facilitating higher volumes and expanding the product portfolio being offered through Creative Peripherals. We even showcased the speed and ease of use of CCART when we demonstrated the first order online during the launch event. Within the first 6 months of launch, many of our existing as well as new customers have joined the platform, making it a huge success. We recently added a seller module on the platform, which will allow a partner to sell their entire inventory of products to their customers through CCART, including products that are not directly under Creative portfolio. Additionally, we will also enable partners to have their own branded microsite hosted on our platform. These features really benefit the partner and would garner further adoption among players. CCART will fortify our presence as one-stop shop for customers as well as improve our working capital cycle and profitability. Our brand associations diversify and expand our portfolio and reflect the company's recognition among global brands. Even as speculation of third wave of COVID looms, improving consumer sentiment would spur demand for such products in the India market, both online and offline. And as CCART gains momentum, we foresee a strong growth in customer base without additional cost, which should translate into higher top line and profitability. So from an overall business perspective, that is all from my side. I will now hand it over to Mr. Abhijit Kanvinde, our CFO, who will take you through the financial performance of the company in Q1 FY22. Thank you.
Thank you, sir, and a very good afternoon to you all. I will share the highlights of our consolidated financial performance, after which we will be glad to respond to your queries. Our financials are reported as per Ind AS guidelines. Looking at the Q1 FY22 financial results. In the quarter ended 30th June 2021, our company achieved net revenue of rupees 135.88 crores, growing 110.57% year-on-year. This was mainly since last year's first quarter was severely impacted by the nationwide lockdown. Growth was also supported by demand for IT products such as Samsung, Cooler Master and PNY. It is notable that this represents operations of less than 2 months due to the lockdown across several states in India. However, June has been one of the highest revenue months and similar trajectory is seen in July as well. The EBITDA stood at rupees 4.11 crores as against rupees 1.90 crores in the previous corresponding period, increasing 116.91% year-on-year. While our raw material costs increased due to a change in product mix, EBITDA margins improved due to higher sales and relatively lower other expenses. The net profit for the quarter is at rupees 1.23 crores as compared to rupees 0.58 crores in Q1 FY21, a year-on-year growth of 113.43%. Our EPS for the quarter was rupees 1.44. This is all from our side. We can now open the floor for questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use a handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from the line of Suraj Navandar from Prithvi Finmart. Please go ahead.
Hello, good afternoon, sir.
Good afternoon, sir.
Sir, my first question is regarding the difference between the standalone and the consolidated numbers. If I look at the revenue, there is hardly increase of like couple of crores, but if I look at the expenses which are above EBITDA line, they have grown by around 4 to 5 crores. So what is it? What am I missing here? If you can throw some light on it.
Okay. I agree that the difference between console top line and the standalone top line, the sales are above by around 2 crores. Okay, and the expenses are and therefore but in subsidiaries, you must understand that the first quarter sales was almost not there, okay, as per our expectation. We in the subsidiaries we sell it to Middle East and other countries, and due to the second wave of lockdown, almost most of the countries were in a lockdown state. The expenses were higher in the other expenses, which were in subsidiaries. They were the salaries and salaries to the sales teams and other establishment expenses, and that is why our profit after tax and for the console, and if you compare, it is lower by 1.8 crores as compared to the standalone. These higher expenses, I'm sure, will be set off in coming quarters when we sell well in our subsidiaries, and I'm sure by third quarter we should expect a good performance, and we expect that the console will bring synergies, and console will be higher than the standalone performance.
Just to add to what Abhijit said, this subsidiary is mainly for Honeywell. So we have got licenses to sell Honeywell products across 30 countries in India, which we got last October. And then we started taking relevant approvals from various governments. So for example, if you have to go to Saudi Arabia, you require the SASO certificate. If you have to go to Dubai and Middle East, you require the ESMA certificate, the TRA certificate, and other stuff. And as you might be knowing, we are launching a complete new range of air purifiers, and also close to almost 55 to 60 models of audio for India and also for international market. And for that, we have to have an international sales team. So and we don't have a subsidiary in Middle East. So all our expenses currently are booked in the Hong Kong subsidiary. And that's why you will see this difference between revenue, because all the expenses for the Honeywell business are being put into that subsidiary. So in a quarter's time, probably next quarter when we talk, you will see a considerable change into that, and also you will see that the efforts and the investment what we have made into the international market will start bearing roots. Because the margin in India, we get 10 to 15% basis more margin when we sell in international market.
Gross margin.
Gross margin. So that's the, so in India, if you make 40% gross margin, in international you make 50 to 55% margin. So the expenses are set in, the revenue has not started. That should start from mid-September to October when we launch the audio and we launch the air purifier range in India and internationally both. I hope we have answered your question fairly.
Yes, very helpful. So Q2 also we will see some, consolidated being less than standalone, and Q3 onwards we will consolidated being higher than standalone, right?
That's what we are hoping, and we are definitely hoping that things will pick up. July has been a good month for us, ever highest. So, if we maintain this traction with grace of God, we should be doing well.
Okay. So in last con call, you had given a guidance of 750 to 800 crores of revenue. So now, given the impact of the second wave, would you want to revise that guidance or stick to it?
We would like to stick to it. We had given a guidance of almost 750 crores of top line, okay,
right,
and which we will surely cover this by the end of the year. And we had given a guidance of 18 to 20 crores of PAT. We hope that we should be able to maintain 2.2 to 2.5%, 2 to 2.25% of PAT, and we should comfortably be able to reach to what guidance we have given earlier.
Okay. And sir, we are going to do the Honeywell business through Hong Kong subsidiary. So with whatever that is going on with respect to sort of an anti-China thing, so do you see any impact in future on that subsidiary?
So we had an option whether to have the subsidiary in Singapore or to have the subsidiary in Hong Kong. We thought Hong Kong would be better because its proximity to China. If there is ever an impact, we can easily move the subsidiary to Singapore. But one thing we will have to remember that the dependence on electronic business is overall on China. So there may be anti-Chinese sentiments in India, but that's not reflected across all the geographies where we would be doing the business. That's the case one. And second, if the sentiments are there, but still the ecosystem for the next 5 years, 7 years does not look like that, the dependence on China can move out. And the last part is if the Make in India, and we 100% support that if the Make in India campaign picks up well, then whatever is our consumption for India can be then outsourced to a Indian manufacturing company. Yeah.
Right. So my next question is regarding the preferential allotment that we have done to raise funds for the new business that we are aiming for, the Honeywell business. So why not do right issue instead of doing a private placement?
Okay.
Good you ask this question.
It's a good question. Please appreciate that the investors what we have got, we were in talks with them for almost 2 years. Okay, they were observing us, they were observing our performance, and after 2 years, they offered offered to invest in us. The second point is on rights. As you all are aware, right issue is something is at the option of the shareholder to fulfill or to put in. Okay, so we thought that this was a correct positioning, that we get the investment from through preferential mode, because if some rights are not what you call subscribed, okay, then we do not have that surety or guarantee of the inflow of money. That is, and it's a long process. So and you are always on the toes. Okay, so we thought this was a better option. Okay, but going forward, I mean, if there is an opportunity, we will definitely like to go in for right issue in coming years.
Okay. So my next question is on the e-waste management. If I go on your website, there is a separate tab for it, but I don't see anywhere in investor presentation or anywhere mentioning about it, anything. So what do we exactly do? Do we get any revenues from it? what is our business model? If you can throw some light on it.
No, so there are a couple of things for that. Anybody who is into electronic trade now falls under EPR, Extended Producer's Responsibility. So the brands which are present in India, they fulfill their EPR responsibilities. The brands which are not fulfilled in India, the agent or the distributor who gets the product, they have to fulfill the EPR responsibility. And as the part of the EPR responsibility, we have to publish on the website what are the measures we are doing for the e-waste management, which are the centers from where we pick up the material and other cases. So currently, we are not thinking of making any revenues from them. It's just a statutory thing which we are fulfilling for our brands and for the Indian government.
Right. Sir,
Mr. Lavender, sorry to interrupt, but maybe please request you to return to the queue for a follow-up question.
Sure, no problem. Sure, no problem. Thank you. Thank you, sir.
Thank you. Thank you.
Our next question is from the line of Sunil Menezes, an individual investor. Please go ahead.
Hi, Ketan and team, for excellent performance for this quarter, especially on a standalone basis.
Thank you so much.
Thank you.
Yeah, I think we talked, Ketan, a month back, I think in an investor call. So you answered some questions on the guidance for the year. I'm interested to know more about Honeywell business. So last time you mentioned that, maybe this year we will target around 100 crores and we will further grow to 200 crores next year. So this is the business which can improve our margin substantially. You mentioned that we have around 35 to 40% of gross margin here. So if you can give more guidance on that, because that is where I think last time you mentioned that the Marriott and some hotel groups are also interested in the purifiers, and we are launching that product shortly. Further, we are expanding in Middle East. So if you can give us some guidance on what trajectory we will be in this business this year and maybe next year.
Thank you, Sunilji. I believe you are joining from Bahrain?
From Abu Dhabi.
Abu Dhabi, yeah. Okay. So yes, Honeywell is the very important pillar in our strategy, as it delivers close to 40% gross margin to our business and higher in international markets. And look, there is a product cycle, right? So when you say that last year Honeywell business was close to 16 crores and why this year it will become 100 crores, that is because of two reasons. One is we have extended geographies, and currently we have almost now 250 products in Honeywell, in mobility, in power conditioning, in air purifiers, and now audio. With air purifier and audio, they are very consumer-oriented products, and their CAGR is growing very high. Air purifier in India was a seasonal product, mainly for the northern part of the country. But because of COVID, now everybody wants a far better quality of air, and that's why air purifier has become the basic necessity. As you wanted a refrigerator, a washing machine, or air conditioner, TV, now everybody wants air purifier. So currently also, if you see in this year's strategy, we are only aiming to open the Middle East, Saudi Arabia market, and then next year we want to go to the other markets. Any product to become popular also for the retailer to sell also requires a 3 to 4 month cycle before he understands the product and sell. So currently we are on the right run rate. For example, if our last month figure of you also we see, Honeywell should be around 3.5 to 4 crores already. So by the end of the year, we should be between 80 to 100 crores. And as we open territories like Singapore, Malaysia, Thailand, which falls as a license to us, we definitely think that next year 250 crores is achievable target. We just signed up a couple of days back with Al Banali Group, that's the leading distribution house owned by the Sheikh of Dairy. They signed up with us for Honeywell. And as we sign more and more distribution houses in Middle East, we are sure that this guidance can be 100% met. And we have, so as far as our guidance is concerned, we take a very, very conservative approach because we don't know and how long the COVID effect would be there. So this is a very conservative guidance we have taken. If you see the overall audio market, the audio market is close to $25 billion yearly. So if we do well in 3 years' time, our audio business should be close to 300 crores, just the audio business, if we do well.
Okay. Thank you. Thank you very much.
Thank you.
My next question is on C-Cart. I think you have been mentioning in a couple of calls that this is initiative, and I will know that internet-enabled businesses are doing extremely well in this COVID time. So any plans on moving C-Cart as a subsidiary, or what is the future plan? Anything other than keeping it as a part of Creative, or we want to move it to a different company or a different structure here?
So very good question, Sunil, and I think you read my mind kind of. One thing we are very clear and sacrosanct of the fact that the platform business or the new age internet business requires a different skill set, a different culture, and a different remuneration structure also. So we have a very good board. We have Professor Suresh Bhagavatullah from IIM. He is a PhD in social networks. He has his colleagues who teach platform businesses at all the B schools. So we are talking to a lot of them to understand that what should be the right treatment to C-Cart for the future. Currently, we don't know whether we will spin it off or something, but we will wait for the board's advice, we will understand, and then we will take it forward. So currently, we have not decided anything on that, but in a quarter's time, we should be able to have a blueprint. So we have a vision for C-Cart for 2024, which I think we have already, I think in our overall vision, we have spoken about it. So whatever is necessary organizational structure is necessary to achieve that, we will do that. But currently, we are not decided.
Okay. Thank you very much. I have a few more questions, but I will join the question queue later. Thank you.
Thank you so much.
Thank you. Next question is on the line of Ayush Agarwal from Mittal Analytics. Please go ahead.
Good afternoon, team, and congratulations on a good set of results. Most of my questions have been asked, but I'll just take an update on C-Cart that, what are the key metrics that we are tracking for C-Cart and how are they doing? Is it average order sizes? Is it, how many more retailers have we onboarded? What other metrics is the team looking at, and what is the progress on them?
Okay. So we track various metrics on C-Cart, right? There are two ways people can put order on C-Cart. One is the direct the retailer or the distributor puts the order on C-Cart, or my sales team can put an order on C-Cart. So we follow that metric, and our constant endeavor is that all the orders get put in by the retailer or the distributors themselves. So from inception, if you want to, so we launched it in August as a software, and then we moved ahead. So more than 15,000 orders currently, and more than 200 crores plus sale has started happening on C-Cart. C-Cart and Creative are kind of the same side of the coin, so mostly everything is there. Now our seller module is also in place, and with the seller module, the retailer or the distributor will be able to offer their own products on C-Cart. So with C-Cart now, Ayush, overall what we are trying to do is in the business what we are, your money is into only two things. One is it gets into inventory and second is credit. And with C-Cart we are trying to create a platform where we can play on somebody's inventory, and if there are larger number of buyers on the platform, we don't have to extend credit. So then it becomes our blue ocean that the two most important things, credit and inventory, your money does not get stuck, and the customer gets the convenience of ordering, convenience of having his own name, marketing material, convenience of tracking his order, convenience of having his own website. So that's one thing. Second metric is that we check with how many platforms can C-Cart get connected. So because we think that the future is that one platform will talk to other platform and then offer products of each other to their respective customer. So that's the second metric we do. Third is we also try and see that how many orders can C-Cart overall handle. And then the basic metrics of how many customers visited C-Cart site, how many time they spent on the site, how many people opted for training, how many people opted for discovery of new products. So these are the various metrics we are looking at. While we are quite old into the brick and mortar business, this is a fairly kind of a new age business. We understand it well, but we are looking at skill sets which can do better justice to this business.
Absolutely. That's good to know, sir. Just a request that, along with the presentation, we can have a page on C-Cart on the orders that were processed during the quarter and with sales value as well and number of orders and how many retailers did we onboard. That would be really helpful for the community to, gauge how the platform is doing.
Got it. So you are saying that we also start publishing C-Cart progress on C-Cart separately, right?
Absolutely. If there are no competitive, reasons to not do it. Otherwise, yeah. I think the company should do it. It's a good practice, and it will help the investors learn more about the company as well.
Surely. Sure. So we'll speak to the board and we'll try to incorporate this.
Thanks.
Thank you so much.
My second question, sir, is when we look at the imaging results this quarter, it's quite high. I mean, 8.5 crores revenue and 4.7 crores segment results. So what am I missing here? What happened this quarter in this segment?
No, so a couple of things are there. One, imaging is still underperforming overall because of the travel restrictions. So imaging has suffered for two ways. Actually, more than the COVID, the whole problem with CDIT is because of the chip shortage, which is affecting the car, the television, and for us also. Supply chain is a huge issue. If you can secure supply chain and if you can get it on time, or at least you get the supply, then the sales can happen because the world is slowly opening up. So we think that by next quarter, travel and tourism and outdoor should pick up the place. Second is the profit more than 50% is because we readjusted our cost of goods. As you know, we had one case going on for GoPro. So in parts and pieces, our refund for that money is coming back, and that by accounting standards, we have to adjust it into the cost of goods. So the cost of goods keeps going down, and that's why you see such a huge profit there.
Right, understood. Yeah, I remember you had spoken about this GoPro. Right.
Very sharp of you to catch that.
Yeah.
Thank you.
All right. Thank you. So these were the questions from my side. I'll come back in the queue.
Thank you. Next question is on the line of Ravindra, an individual investor. Please go ahead.
Hello, can you hear?
Yes, Ravindra, good afternoon.
Good afternoon. Yeah. So my question is talk a bit about the competitive landscape, about the business which, like, who are the main competitors? Should we see the growth trajectory in, let's say, in medium term, 3 to 5 years?
So Ravindra, very good question, but I think because of the COVID and because of our millennial generation being 70% less than 35 years of age, being more than 75% of our country, we think that electronics is the new FMCG. So you had fast-moving consumer goods, now you have FMEG, fast-moving electronic goods, because for the millennials, the gadgets is what takes them, right? And today, if the COVID was not there, right, the availability was abundance, every product was kind of similar, every product specification is kind of similar. So the biggest differentiation is a product which gives a great customer experience. And as a company, we think that we want to pick up products which resonate with the new FMEG kind of generation and who are looking for a great experience product. So if you look at our recent tie-ups also, say Hyperice, right, it helps you to move. So today, a lot of people with sedentary lifestyle, they sit in front of laptops, or people go for walks or for cycling. So it does two things, right? It helps you to either warm up before your exercise routine or walking routine, or it helps you to relax your strained muscles during, say, gaming, online gaming, or you're set on the computers for a long time. And I gave you this whole context is because there are very few companies who really are into this segment, right? So we are bit and piece of a couple of companies. So if you consider distribution, then our peers can be Reddington and Ingram and other people. But they are huge companies. Their 50% of business comes through mobility, where we are not there in the mobile phone business, right? And if you consider into the licensing space, then somebody like a Page Industry does a good thing on the licensing space, in the listed space, I am saying, right? And in the platform business, either Udaan or IndiaMart could be there. So currently, it's kind of 2-3 businesses into creative new tech, and so you'll have to take your call. When we become, say, Honeywell becomes 30-35% of our business, then we can call that we are a kind of a licensing business company like a Page Industry, or say C-Card becomes a larger than that. So that way, there are smaller, there are some companies which do businesses like us, but they are much regional and nothing is national. So for consider Hyperice, right? Now, when they were in India for almost 2 years, right, and they didn't have a right, I will not say right partner, they didn't have a partner which could be across India. So now when they want to scale up and they want to really do it big, and I think they sponsored a lot of Olympic teams across the world, Olympic athletes actually. So they want to do that, and that's how we became their right choice for that. So I hope I am not confused and answered your question clearly, or did I confuse you more?
No. Got some idea.
Oh, got it.
Yeah. And second and last question is, do you have any further plans to raise funds this year or maybe next couple of years?
No, we have recently done a round of equity ways. So we don't think with our existing debt structure and the additional equity, I think we should be able to go till the year end as far as our requirement of funds goes. Okay. In case additional money is required, we will float it through working capital loan or debts, but not this year.
Okay. All right. Thank you. And all the best to the
Thank you.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. Next question is a follow-up from the line of Suraj Navandar from Prithvi Finmart. Please go ahead.
Thank you, sir, for the follow-up. So my question is, like right now, if I'm not wrong, we do only hardware distribution right now. So is there any plan to get into distribution of the softwares or the cloud services or something of that sort?
So, kind of our company, Suraj, is placed, so before any product or software services or whatever we take, there are a couple of things which we want. One is we want exclusivity. Second is we want a certain fixed margins on that, right? If you want exclusivity and fixed margins, then we should be able to value it, right? Otherwise, that relationship cannot work a lot. So on the cloud services side and all, you are more of an agent where everything happens between the two companies and there is no value add on other side. But yes, it really helps you to have a great cash flow because usually there is not more working capital required. So if an opportunity comes in, we are not averse to it, but we are not actually actively pursuing that opportunity. On the other end, we are trying to do non-product items, so where you don't have, you have only digital delivery and not physical delivery. So something like an extended warranty, something like a 3-year cover-up, something like marketing services, that we are trying to build it on the C-Card platform, but not on generally.
Okay. Sir, I just needed a bit more clarity on the Honeywell business. So,
yeah, go ahead,
as and when we will start the Honeywell business, so will we be paying a fixed royalty to them, or how does the revenue sharing between us and the Honeywell works?
Okay. So, couple of things, Surajji. Number one, we have already started the Honeywell business. Right now, we have added 2 more categories. One is air purifier and audio. We are already into passive networking in Honeywell. We are already into mobility solutions, so your docking stations, your chargers and other stuff. And we are also into line conditioning equipment of Honeywell. So these 2 ranges we would be adding to that. Second is we also have now almost 30 countries into our portfolio where we can use the Honeywell logo, get it contract manufactured and market the product. Now Honeywell operates very simply. They want the factories to be audited by themselves. So you can manufacture products only which are audited by Honeywell. Second, it wants a fixed royalty on your first sale. So after buying from the factory, when I sell my product, I pay a royalty of close to 3% to Honeywell. And the last one is that before the products are dispatched, the Honeywell wants to do the QC. So if we follow these 3 things, and you also obviously have a minimum guarantee for the royalty because they want you to develop a market in a certain way. So these 3 things, if you do well, then Honeywell does not bother you much. Of course, as a partner, it helps you by giving you specifications. It helps you by suggesting which models will work. It helps you in getting, so for example, the Marriott hotels worldwide are going to use a Honeywell air purifier de facto. And that's the relationship which Honeywell brought to us because of their association with Honeywell in terms of air conditioning, temperature control, other stuff, right? So that's what Honeywell gets with. Now, why did we choose brand licensing is because if we develop a product and we put our brand name, we may get a 10% markup. But if we develop a product and Honeywell's brand name is used, we could make a 30-40% markup. When we go abroad with the Honeywell name, we get a seat on the table. People take us seriously. And the last is the know-how which keeps coming from Honeywell as knowledge sharing. So when we are launching the new air purifier, they said instead of HEPA 13, it will help you to stop the COVID virus because HEPA 13 has 0.1 filtration and COVID virus size is 0.15 micron. So that's how Honeywell keeps adding value to this. In the agreement which we now renew till 2025, now we've gone on a fixed royalty. So tomorrow, sell more, my Honeywell royalty is fixed at a certain fixed value. So above that, I will not have to pay to Honeywell anything.
So even if that 3% of the sales value goes above that agreement value, you will not pay.
So if we do say 80 crores, it is 3% kind of the value. But tomorrow if I do 120 crore also, I will not have to pay 3%. Then the value remains the same.
So whichever is the higher you have to pay?
No, in this case, whichever is the lower we have to pay.
Oh, right, sorry, whichever is the lower.
Yeah.
Right. Sir, on the C-card business model, so the people who are not distributors of the creative and use the C-card platform, do they have to pay any charges on, let's say, registration, or do we charge them for every transaction that they do?
No.
How does the revenue?
Currently, so two ways the revenue can work. One is by cost optimization, right? In a distribution business, the number of partners you add more, that much manpower you will have to require, that much customer support executives you will require. With C-card, all that gets eliminated because the person also does that. Once we get a substantial traffic, then brands will become, would want to get the real estate on the first page of the screen. So from marketing, you can get the revenue. Second, in C-card, there is one good feature that any partner who wants his own website can get his own website in 3 hours with our 4,500 products on that website. So he gets upgraded from a retailer to a omni-channel partner with retail and online. And these partners, right now everything is free to them. After they reach a certain stage, we may think to monetize that. And the last part of the revenue is if as a platform we give C-card to use to some other partner, then probably as a SaaS model we will be able to get the revenue. Currently, because it's part of creative, it's not charging any transaction fees to creative because the whole financing, funding, development has been done with creative resources. So currently that's the stage.
Okay. That's it from my side, sir. All the best. Thank you very much for your time.
Thank you very much. Thank you.
Thank you. Next question is from the line of Pradeep J, an individual investor. Please go ahead.
Good afternoon, Mr. Ketan. Just wanted to get information on the other brand apart from Honeywell, which you mentioned last time that you want to have around 30 to 35% of the business coming from licensing. So
yes.
Any progress made on that? Have you zeroed in on the other brand, and what stage are we on that?
So Pradeep ji, you are talking about new licensing brands or?
Yeah, licensing brand apart from Honeywell, the high margin brand.
So we have initiated talks with a couple of brands. Our internal team suggests that we build the business of Honeywell to close to 250 to 300 crores. That's 25 to 30% of our top line, and then start doing other brands. Having said that, to get, because of our learnings, we have understood after Honey that you can't go to the market with a category which is not complete. You can't go to just single country. All that, and you will require registrations, certifications, and they all require a 5-6 months period, right? So we are in talks with a couple of brands, and we are looking at if we can get lesser SKUs, higher ASP kind of products with that brand. Then probably another 8 to 10 months we will be able to go ahead. So we are talking to a couple of them. I will not say that we are into the fag end of the discussion, but we have just initiated the discussion and started.
Okay. If you could just share this data point, what was the sales in the month of June?
So June we did 69.73 crores. That was our highest ever sale. And in July also we surpassed June, so we were close to 70.15 crores. So these were consecutive months highest ever sales. So June I would have associated to, because we had almost not worked for 45-50 days, and June was the first clear-cut working. Because this time in the COVID, it was not about West and Bombay, it was more about South, so Kerala being closed, Chennai being closed, Bangalore completely being closed, Pune being closed, Calcutta being closed for a while. That's the case. So I think June was part of that, but July also was a great month.
Okay, thank you. Those are the questions.
Thank you.
Thank you. Next question is a follow-up from the line of Sunil Menezes, an individual investor. Please go ahead.
Hi, Ketan. It's actually nice to hear a lot on C-Card. So you mentioned that this is a first of its kind B2C business in India. And this appears truly a disruptive business model. And you mentioned that anyone can do business through C-Card. But we all know that internet-driven businesses all depend on how the masses or people at large are aware of the brand. So have we done anything, or are we doing anything so that we popularize this C-Card either through social networking or some other channels?
Okay. So a couple of things, Sunilji. One is that I am in a dilemma because I live quarter by quarter currently, right? My quarterly results are so important currently. And because of COVID, we have not generated substantial profit into this business. So I completely resonate with you in terms of that we have to amp up the marketing, and that's what is our internal plan, that as our internal accruals start building up and we start looking at a PAT of say 2.5%, then part of that can go on building up the C-Card plan. Plus also currently there is one circle of over 8,000 odd retailers or business partners who work with us, whom we want to get them completely on C-Card. Second, the BPL lightning business we started, where we are getting distributors and retailers. So that we want to onboard to C-Card. So right now the lower hanging fruit for the next 3-4 months is such that we can get our people on C-Card. And our pitch also changed, right? With the seller module, till now we were saying ke C-Card se maal kharido. Now we are going to partners and saying ke aap apna maal C-Card pe becho. And any retailer, any partner is more enticed when he hears this word that we help them sell, not help them buy only. So I think that's the case. Still a quarter, because the times are so unpredictable that you have to plan month by month and not year by year. That's the case. So completely agree with your fact, and that's why if you go back to the previous question what Suraj asked for in the start, we will overall have to wait for a while and see that what's the treatment we give to CCAT? Either we hive it off as a subsidiary or what do we do? That's the case.
Okay, that's good. I think, as you mentioned, more people know all these features. I'm sure you will have more people onboarding and trying to do their own website or their own business, right? It's good. Thanks for your clarification. My next question is, with C-Card, you mentioned that we can do so many things. And one of the stuff you mentioned last time in, I think, during Q4 call, that, through C-Card, our partners and retailers can sell other products as well, right? That is Samsung or some other brands which they are carrying.
Yes.
So with that, for me, I think this is a great opportunity for us where, if our retailers can sell their products and we can get X percentage as a commission or whatever it is, so that should go directly to our bottom line. So do we see this as an opportunity so that we can encourage more our retailers and it can improve our profitability as well?
Yeah. So that's what we call as a seller module, and we have already launched our seller module. We have tried with 7 to 8 retailers, and see, India is such a country that every brand has their own strategy, right? So today also Samsung, besides GST also coming in place, for Pune I have to material buy in Pune only. I can't buy material for Samsung in Bombay and ship to Pune because they track all their inventory by region, by serial number, right? And this C-Card has to resonate that fact also, right? So when a seller comes on my site and tries to sell some material, say LG, which is not supposed to sell, then that's the reason. Or vice versa, sometimes the seller tells us that I can sell only for this region, so my product should be displayed only on this region. So when we launched the seller module and we did our beta and then we spoke to a few partners and then there were a few suggestions which came from them. And we have built up that suggestion, like they wanted a calculator which could tell them that what is the final amount they will get back from us. Then they wanted kind of ETA to be displayed there. Then they also wanted the Amazon pricing to be displayed. So what is the offer they should give. So all that we have built it up. The beta is happening and I am sure that will really change the dynamics for C-Cart and for creative as a whole.
Okay, thank you. And again, I look forward to the next call after Q2 results. Thank you.
Thank you.
Thank you. Thank you very much.
Thank you very much. Ladies and gentlemen, that was the last question for today. I now hand over the conference to Mr. Patel for closing remarks. Over to you, sir.
I thank the entire team of Creative for their untiring efforts, hard work and dedication, which makes the company resilient to upheavals such as the pandemic. Also, I appreciate all of you for participating in our conference call. Please do get in touch with our investor relations team for any further questions. Thank you.
Thank you. Thank you.
Thank you very much, members of management. Ladies and gentlemen, on behalf of Creative New Tech Limited, that concludes today's conference call. Thank you all for joining us, and you may now disconnect your lines.